Markets finished out mixed today on tech returns and reportings of earnings. Apple just reported. So let's jump in and take a look at what is going on here. So Apple just reported they met expectations on earnings, but missed on sales a little bit. So interesting times there. Let's take a look at Apple here and see what happens. The NASDAQ is down 1.6% today, S&P down 0.61, but the Dow was up a little bit. So it was the tech stocks, particularly Facebook. We'll take a look at that in a second to see what happened there. And Dogecoin is surging as Elon Musk's Twitter deal approaches closing. So all kinds of interesting little bear market speculation and bounces going out. Here's Facebook right here. Probably one of the biggest one-day declines in Facebook, but back below levels not seen since 2016. So interesting times for Facebook right there. Let's take a look at Apple real quick after hours. Apple is dipping a little bit after hours. Again, they beat on earnings, but not on sales of the iPhone. They've been, having some issues with iPhone sales. And here it is right here. That's Amazon. So Amazon stock sinks 20% on weak fourth quarter guidance. So Amazon is down as well. Let's take a look at that real quick. This one, here we go. Amazon's down a little bit. So all the FANG stocks are kind of bringing down the NASDAQ, and Apple was the last one. But again, Facebook was the big one that I've been watching, down to record levels here, trading at 96 bucks right now, and all the way from the all-time high of $383. Pretty crazy. Interesting times that we're experiencing here with the tech sector. Let's take a look at, let's see, where is Doge? There's Doge. Take a look at Doge popping up a little bit there on Elon Musk Twitter news. Don't know why Dogecoin would pop on Twitter, but what the heck, whatever reason to drive it, it's up 40%. Let's look at it on the hourly. Nice little jump here. This is over the last couple of days that Dogecoin is up 40%, 44% to be exact. SHIB is usually right around there with Doge. SHIB's been on a little bit of a tear. Last couple of days up 20%. And then of course, Bitcoin starting to unwind its little Cobra pattern, probably going to turn into a BART here, but Bitcoin jumping about 10% over the last couple of days, but unwinding that. This is the hourly of Bitcoin right here. Let's take a look at the daily. Popped up here. Everybody was looking for the big reversal, busting this, falling wedge pattern right here. Breaking out of that, everybody was looking for continuation to 25,000, biggest short liquidation really in a long time for Bitcoin. But again, starting to unwind that move. The key will be to come down to see if it kind of holds, follows the wedge down and breaks down lower from there to retest these previous lows. And with the Fed coming out next week and raising interest rates 75 basis points and providing guidance, there is a little speculation that they're going to provide some guidance on softening moving forward, which they've already said they're going to slow down rate hikes in the future. But right now, GDP came in a little bit hotter today and showing some growth. The labor market's still strong. So the economy is not responding to the Fed's action so far. Assets are, of course, but not the general economy. So inflation is still job one. It's still a big problem for the Fed. What they have done so far has not put a big enough dent in inflation for them to pull back. So interesting times right now for the Fed. So it'll be interesting to see what their guidance looks like, if they even address any kind of slowing or softening or anything like that. My guess is they're going to come out, talk the markets back down again. They do not want to see loosening of financial conditions, which is what we saw after the speculation or the misinterpretation of the message from the Fed speak last week, where they said we're going to slow down the rate hikes. They kind of misinterpreted what the Fed was saying. The Fed wants tighter financial conditions. They want to bring inflation down. They want to slow down the job market and loosen the job market a little bit. Job market's still strong, and there's still too many jobs for too few employees, which is keeping pressure on wages, which is keeping prices up. And of course, we saw the economy grow. So the Fed's got more and more ammunition to keep raising rates higher and higher. So I think we're going to hear the same thing, that inflation's job one. They're going to keep rates higher for longer. Do not expect loosening financial conditions anytime soon. So I think we're going to see markets reverse all of this little pop that we've had. And now, you know, of course, the latest news too with Bitcoin, we know that the hash rate is at all-time highs. The difficulty adjustment is at record difficulty right now. That's putting pressure on miners. Core Scientific, the largest miner in the industry, is warning of bankruptcy. They've halted payments to lenders. So we're going to see some Bitcoin miners starting to crack here as we get into closer to the end of the year, if the price does not recover to where they can sell to cover some operating costs. But with the difficulty adjustment and with the competition in mining, it's going to be extremely hard for miners to be able to stay afloat. So these are the things that I'm looking at. I'll see you in the next video.